I've been hearing people telling me about credit this, credit that. Why is it important for me to have a good credit score?
With the content that I'm getting, some people are saying I should cut my credit card, whereas some people are saying credit is the root of all goods. So, what should I do?
Hey there,
Hello, everybody. You are tuned into Know Wealth. My name is Neo.
and my name is Lebu. Today we're actually speaking about what is credit and what is the importance of having a good credit score.
We've been told by our parents. I don't know. It's as if we all just have this parent that's telling everyone. I'm sure you also in this situation. If your parents have told you, or if you are on the lines that I don't need credit, please hit the comment section below. Let
I'm
us
one
hear.
of them. Just hit, I'm one of them.
Yeah, I think I'm one of them is better. Just hit I'm one of them, and then let us have a conversation about credit.
So now let's start now. What is credit?
When we're talking about credit, we're basically saying that you are asking money from the lender, and then the lender is giving you credit in that form and on the basis of whatever interest rates and the payment method that they have stipulated. I truly believe banks are our partners somewhere, somehow. It's just that what type of partners are they? That's when you can say they are more of your silent partners. Because even when you're looking at ownership, when you are buying a house and you didn't buy it cash, you already know that if you bought it at, let's just say it was at 1 million, and then you put 100,000 as your down payment, that means the bank owns the other 90%. But now the bank is not going to come to you every month and say, hey man, how's business doing? Did they pay rent or what's happening? The thing is, if you go to somebody else who does not truly understand your business and you're asking money from them, they are going to be involved. And you find out that that person will be telling you that, why did you paint red? Or I didn't like the shower that you put in. So the bank is not going to be that type of partner. They are more of your silent partner, enabling you to push your business.
So now, looking at the importance of credit, right?
Yeah.
Why would you think that it's important for someone to actually be thinking about building their credit score or thinking about getting credit on their business or in property?
It's very important to understand that you do need credit, whether you do have that money or you don't have the money. So if you don't have the money, credit allows you accessibility to whatever field that you wanted to get into. So this can be your property. If you don't have that 1 million to buy the property cash, credit is just enabling you to buy the property. Now, if you do have that 1 million and then you can still apply for more credit, that simply means that I can actually grow faster using my hard-earned cash and also using my hard-earned credit. So when you're looking at it from a growth perspective, credit enables you to grow.
I mean, that's the point that I'd actually like to emphasize, right?
Yeah.
With credit, it allows you to scale actually faster than you would if you're looking at buying this particular property cash, right? Or let's look at any business. If I'm actually going to be using credit to actually pay off something, that basically means that I didn't use any of my money. Let's put this into example. Say, for instance, I'm in the business of selling sweets, right? Neil's my credit guy. He's going to give me sweets for free. And then I have someone who's actually going to be buying the sweets. So if Neil gives me the sweets and I have someone that's actually going to be buying these sweets, already I'm acting as a middleman, whereby I'm getting the sweets for free, I'm selling them, I'm able to keep the profit, and I'm able to actually give that Neil his money back. So now where does this become a problem? This becomes a problem when people actually start becoming greedy. So now that I get the sweets from Neo for free and I'm actually selling them, and when I get that money back, I start using all of the money and not paying Neo. Now that becomes a problem because now my credit score actually goes down. So make sure that even if it means that paying your credit is the first thing that you actually do, make sure that you do pay your credit because it is actually going to take care of you. And now with credit, something that you also need to take into consideration is that I need to be sure that I'm actually going to be selling this thing, right? So now if Nell is going to give me these sweets and Nell expects me to pay him within a month, I need to make sure that the demand for the sweets is actually there. So now how do you actually make sure that the demand is there looking at property investing? When you are actually going to be going into a property or buying a property, you need to make sure that you speak to the estate agents that are actually selling properties around that particular market so that they are able to tell you that is it a fast moving market or is it a slow moving market? So now if it's a fast market, you know that two properties are actually sold for every month, looking at the past 12 months, right? Because now we can only use what has actually happened to forecast what's going to happen. So if two properties were actually sold per month in that particular area, you already know that, okay, this area, people are actually buying properties. However, if it takes 2 months for only one property to be sold, you can already tell that the demand in that particular area isn't really moving that fast. So now, how do you then position yourself in order for you to actually buy this property if that is a risk that you want to go to?
You talked about something very important, like being the middleman when it comes to credit, especially as property investors. I'm asking for about 1 million from the bank. And then with that 1 million that I'm asking from the bank, the money is being placed in this house. Do you understand how dangerous it is to buy the wrong property? Because now once this can actually go sour or can go south, then who is to blame? It's the middleman. Therefore, as the middleman, we truly need to understand the rules of property investing. We truly need to understand the flow of money. How is that going to contribute towards credit? Because now once you understand that, once you're looking at affordability, which is the basis of what we're speaking about, because the more I can afford in terms of the money that I'll be getting as the middleman from my tenants, the more I can afford and the more I'm paying these guys, I'm actually proving to them that I'm worthy for that amount. And what happens over time is that you can actually gain more trust with them. The more trust you're gaining from your creditors is the more they can actually give you. So that ultimately means the more they give you, the faster you can grow. I mean, look at it also this way. I will not buy my next property cash, especially let's just say that I didn't have the money. So even if I start saving the 1,500s that I'll be getting from my property or the 2,000s, how long will it take me to buy my next property? It will take, if not 30 years, 50 years. So now what credit does, it actually gives you that opportunity that let me get the money that I'm getting, put it in the bank, and then see how am I playing with affordability to afford my next property. Because it's of no use whereby I'm afraid to take my money to the bank, I'm putting it under my sheets or I'm putting it under my bed, saying that, you know what, I'm not paying any bank fees, only to find out that I'm shooting myself in the leg because that money is not actually proving how worthy is my business in light of credit.
So now at the end of the day, it's how do we actually scale our business in a faster way?
Did you know that your credit score can actually affect your application for renting an apartment or a house?
I mean, this is something that we really need to check, especially as property investors, that when you do actually come in my property and you're telling me that you are actually going to be paying on a monthly basis consistently, I need to actually run a credit report on you. So now this is called the TPN. So TPN actually checks, have you actually been paying on a consistent manner? If you haven't, then that becomes a problem for me to actually believe you that you are actually the right person to be living in this property. Because now remember, as a property investor, I need to make sure that the person that I'm actually putting into this particular property is able to actually pay at least their clothing on time. Because if they're not able to pay that on time, chances are they won't be able to pay my rent on time. So I need to make sure that they have a good credit score.
Side note, as a property investor, especially if you're renting out your property, this is something that you'd like to go deep into so that you avoid putting yourself into troubles, because some people that do not honor the credit that they took willingly, so why would they start honoring you? So that's something that you need to take into consideration to protect yourself and avoid people that do not honor their credit. And then secondly, did you know that even some employers go to the extent of looking at your credit score as an employee before you get employed? I mean, look at it this way. If employers are going as much as going to Facebook, going on to Instagram, and going on your Twitter handles before they employ you, why wouldn't they look at your spending habits in terms of credit? Because last thing the employer also wants is employing somebody who's not loyal towards their arrangements.
I mean, we've actually spoken about credit in a good light, right? However, I also want us to actually speak about credit in terms of what happens when you become reckless with it, right? Reckless meaning that you are going out on dinner dates using your credit card and you don't have a plan on how to actually pay that. You are actually buying expensive cars, expensive colognes using your credit without actually having a backup plan for that. So now what we always advise is that if I have 3,000 in my bank account right now, I can use the 3,000 in my credit card so that I can pay 1,000 on a monthly basis to that particular credit card. In that way, I have a plan on how I'm actually going to pay that credit back. So now the problem becomes when you are actually being reckless, spending the money on the credit card, and now you don't actually have a plan on how to actually do that. So now with property investors, I know that we love credit. However, we only use credit for investment purposes. So now when Neo tells me that there's a property deal, that's the only time that I'm going to be taking out my credit card. However, if I do actually want to keep on growing my credit card on a monthly basis, buying groceries, I know that I need to have the 3,000 in my bank account so that I know that on a monthly basis I can then pay the 1,000 until I've actually finished that particular debt.
This was credit according to us from a property investing perspective. So hope you guys are going to have fun with whatever that we put on the table and take it into consideration that credit is not so bad. Credit is not your enemy. You can actually use credit to sustainably grow your business. It depends on how you're looking at credit.
Normal.
Signing out.